Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, macbethmcleodgroup.com. Welcome back to the show, Hilliard.
Thank you for inviting me on.
Hilliard, the CMHC says the most severe scenario for Canadian real estate includes a 48% drop in home prices. Is that likely to happen?
Well, you know, the Bank of Canada, and this might be connected to this prediction that the CMHC has. So, of course, the CMHC is the insurance, mortgage insurance company, which is a straight-out gift from the taxpayers of Canada to the lenders who do mortgage lending in Canada. It doesn't help the home buyer. In fact, it hurts the home buyer because it pushes prices higher than they would be. But they do have a economics department, and they do make these predictions. But I think they rely a lot on the Bank of Canada. So the Bank of Canada, about 18 months ago, came out with a similar worst-case scenario. And it was, of course, this is before COVID, right? So it would have been May of... It would have been about 9 months before COVID came out that the Bank of Canada did this paper. And they had a 48% drop in house prices. They had a severe increase in unemployment, a severe drop in GDP, and a couple other things. And, of course, what happened then is COVID came along, and all of the measures that the Bank of Canada had predicted for the worst-case scenario, this is the one that they never expect to happen, ended up being true in COVID and actually being worse in COVID. So the unemployment increase was bigger in COVID. The number of jobs losses was bigger. The decline in GDP was bigger. Everything was worse than the worst case scenario, except for the house prices. They didn't go down. They went down almost nothing because the government immediately stepped in and said, "Oh, we'll defer the mortgages, and oh, by the way, we'll put the interest rates down to 1%, and oh, by the way, we'll instruct all of the banks and everybody else to lend as much money as you want without any questions asked." So this is a very weird situation. In a normal recession, CMHC predictions would probably be right. 48% would be what would happen. Maybe even worse than that. But this is far from normal. This is like worse than anything since the 1930s. We never had a recession this bad. And yet, in some cases, in single-family homes in rural parts of Canada, house prices are actually rising instead of dropping 48%.
Is that because the people who kept their jobs, they were usually well-paying jobs, and so they still have money to buy a house, and the low-end people who would have maybe bought a condo lost their jobs?
You know, I don't know. Like, the condo market is really struggling, although there is some sign maybe that it's not as bad as it was. A few months ago, it was a disaster because nobody wants to live in in Vancouver and Toronto, they've been building 500 square foot condos for several years now. And in the lockdown and the COVID, nobody wants to live in anything that small. Even 1,000 square foot would be terrible. So the boom is on in single family homes, and people are moving out of Toronto and Vancouver to get away from the big city. And so those are where the house price increases are coming through. And those house prices were quite low because nobody really wanted to live in places. I mean, people are paying $1 million for a house in Oshawa. It's unbelievable. It's quite a ways outside of Toronto, as most people know. I talked to a couple yesterday who don't have secure employment. This is a good story. I just had this conversation yesterday. Don't have secure employment. There's the industry that the man works in is in the ski industry, and they're doing some maintenance work right now, but they don't have any Americans coming to ski in BC. So they haven't shut it down, but it's right on the edge, right? And so he's still working, but not very solid in terms of the future. And I didn't catch what what his wife does, but they've been offered from the bank as much money basically as they like to buy places in Revelstoke or they're even looking at places like Nakusp, the resort. Well, I don't even think resort is the right word for it. It's just a very isolated community south of Revelstoke, where normally nobody would consider buying there or living there. But now that's the thing. And the person I was talking to yesterday said, there's people coming from Vancouver and Calgary that are competing with us to buy these places. And, it's beyond anything you could possibly imagine in the worst recession since the 1930s.
Well, some people have called this the gilded recession. Those who were doing well before or have high-paying, secure jobs, the CEOs of companies, they haven't taken any pay cuts. They're still making money. Those are the ones buying luxury cars and luxury properties or vacation property.
Well, it have to be sight unseen almost, wouldn't it? Because you're not supposed to travel. But the people at the high end, and we have clients who are in that category, are doing extremely well because the stock market, depending on which sector you're in, but we were lucky to get in, starting about 8 years ago, we got into the clean energy sector with companies like Tesla and other, wind turbine companies, solar companies. They've just gone absolutely nuts this year. So, and the stock market itself is doing pretty well as well. The S&P 500 was up 16%. The Canadian market didn't do very well. It was only up 2% because the oil sector is dragging it down. But depending on what sector the wealthier people are in, they're making a lot of money on the stock market. And then of course, usually for them, the real estate, even if there were a drop in the real estate, they wouldn't impact them very much because it's not a big percentage of their net worth. So absolutely. And, there's all these statistics that show that people have all the savings in their bank account that they average across all the people. But that's really misleading because it's really the wealthier people who didn't really lose their jobs if they needed to have jobs. It's the people in the middle and the lower middle and the low who wouldn't have saved that money. They would have probably spent it. And they're the ones that are struggling. So to me, what's happened is the government's flooded. So to back up one step, the government replaced the incomes of Canadians and then added another whole amount above that when they came out with their programs last March and April. So the people that can afford to save some of that are doing even better than they were before COVID hit. But the people who have lost their jobs in restaurants and movie theaters and ski resorts and all this kind of stuff, motels, hotels, all those people are probably really struggling. You can't tell by the averages because on average everybody's better off. But I would think if you looked at the individual segments, you'd find that there was a lot of pain out there.
We'll have more with Hilliard MacBeth right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, a friend of the show, has been locked into various financial products for 2 to 5 years by their financial advisor. How does that benefit the client, and how does that benefit the advisor?
Well, it's hard to tell from the description exactly what type of product it is. It could be the commissions. So on the mutual fund industry, they had a thing where you didn't have to pay any upfront commissions, but if you try to leave before 1, 2, 3, or 5 years, then you get charged an exit fee, and that benefited the buyer in the sense that they had all of their money working up front. And of course, the advisor who sold the mutual fund got paid the commission up front by the mutual fund company. And so it was a bit of a sales gimmick, I would say. And of course, if it's in the equity markets, as long as it's not in the oil and gas sector, it probably would be quite happy. There are other, I'm handling some investments for an elderly relative, and the bank, I didn't want to get into the stock market or anything like that with this situation, so I just did it through the bank, and they offered GIC that was non-cashable and a much higher interest rate than a regular GIC. And so I went for that, and it pays a monthly income. So now the good news is there's a way to get out of those contracts. The bad news is you have to die in order to be allowed to leave. So anyway, it's so there's all kinds of different things. But I remember thinking of being locked in. Nobody's going to believe this, but I'll tell the story anyway. In the early 1980s, interest rates were 19%, and you could buy a long-term bond that yielded 15%. Believe it or not, over 20 years. And even better, you could buy a long-term bond that had what they call a stripped coupon or stripped bond, where there was no interest payments. So what would happen was 20 years from now, you'd get your maturity, and in between you got nothing. So you were locked in if you bought it. And but at the peak, at 15%, I remember you could only had to put down 7 cents on the dollar. So to give you to translate that into dollars in terms of the early 1980s, $70,000 was a reasonable sized RSP in those days. And you could buy a 20-year strip coupon, so that would be like 2004 maturing or something like that, and it would mature at $1 million. And you didn't get any interest payments, and they were quite difficult to sell. And I turned to a colleague, and we used to all sit in the big bullpen then, and I said, we should just take all of our clients' money and just put it in there, and lock it away for all that time. And the guy looked at me and said, well, what would we do? We'd be out of a job. But it would have been a great investment. 15% per year, compounded for 20 years. $70,000 goes to $1 million. So anyway, those days are long gone, and of course we didn't do it because first of all, the client didn't want to get locked in for that long, and of course the advisor would have had no job. So there were lots of reasons not to do it.
We'll have more with Hilliard MacBeth right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, are we in the bubble of everything, not just stocks, but also real estate seems to be ballooning as well? And are any of them sustainable?
Well, to answer the second part first, no, they're not sustainable. So every bubble bursts, as I wrote in the book, and actually the fellow I relied on, I met him in 2003. His name's Jeremy Grantham. I'd encourage everybody to look him up. I wrote a weekend note, and people are welcome to subscribe to my weekend notes for free. You just go on the website, and also on Twitter, I tweet them out. And so I wrote his latest piece, which is called "Waiting for the Last Dance," and he talks about how this is the bubble of all bubbles. This is beyond 1929, beyond 2000, and he's talking about the stock market, but it will affect the real estate market as well. And he said he's never seen. Now he's 82. He's a billionaire, and he started working in the investment industry in the 1960s. He's been very successful, but he's well known for having predicted the 2000 bubble bursting and the 2007 crash in the global financial crisis. Although he was early in both cases, but in this case, in 2021, he came out with this just about a week ago or 2 weeks ago. He said it's not years away. It may not even be months away. It just might be weeks away. And he's talking about a very severe correction in the stock market. He's talking at least 50%, probably maybe 60, 70%. And one of the indicators that he mentions, which I've been noticing too, is something that you and I haven't talked about, I don't think, is they call them blank check companies. And the other term is SPAC, SPACs, which is Special Purpose Acquisition Company. And you give the money to the people that are organized this shell company, blank check company. They have all this money, and then they go around and look for an acquisition to buy, and it becomes listed on the stock market that way. It's the way of getting listed on the stock market. Well, of course, all these blank check companies are running around trying to buy these companies on the stock market. They're going to pay like super expensive prices for their, and generally this kind of activity only emerges at the very end of the bubble. And as Jeremy Grantham says, all bubbles burst, and they all burst taking the market back to where it would have been before the bubble formed, whether it be real estate or stock market. So in both cases of Canadian real estate, Australian real estate, New Zealand real estate, and the U.S. stock market, you're talking about very big corrections in the neighborhood that CMHC is forecasting 48% or greater.
Now, I've heard some advisors say to clients, well, yeah, you've been locked into conservative investments and aren't really taking advantage of the huge gains in the stock market. You should move everything into stock right now. Is that good advice? I
don't think so. We've been in the stock market now for more than 40 years for clients, and we spent the last couple of years reducing people's exposure to the stock market because it started to be bubbly a couple of years ago, and then just since the run. So there's people remember in February, March of last year, there was a big correction because of the virus, and it dropped 38% on the U.S. market, S&P 500. And then it recovered by, I think, September, October. It got back to the level that it had been prior to that, which was a record high. So now it's back to record high levels again. It's been bouncing around that for several months now. And, it's just, so disconnected from reality in terms of this is repeating, this is the worst recession since the 1930s, and it still is the worst recession since the 1930s. The loss of GDP, the loss of jobs is bigger than any recession since 1945. So for the stock market to be doing that at this time, plus these blank check companies, plus to have a look at the Robinhood traders phenomenon and the volume on call options on the stock market, all of the signs are there. So it would be, I think, wise to be removing money from the stock market right now. If people are 100% in the stock market, I would recommend they go to a much smaller percentage. And most of our clients, actually none of them are 100% in the stock market. But if they were 60-40 clients, for example, 60% stocks, 40% fixed income, we recommend that they move down to, say, 40% stocks. Reduce it by 20%. When they've got lots of gains to tide them over any correction that might be coming. But you want to survive these corrections. The main thing about the stock market is you have to survive the correction in order to make money in the future. The people that are 100% invested, they'll end up selling some point during the correction, and then they won't get back in.
Are there any areas that are hot right now and you think might survive a crash of everything?
I don't think that there's anything that would survive a crash of everything. I do think, though, that it's pretty clear that the next 10 to 20 years, the investment in clean energy is where my research has shifted now. the investment in clean energy is going to be enormous. But, so there's you can figure out, people have figured out how much money was spent on the Second World War in terms of fighting that battle. And, the numbers are in today's dollars are in the trillions of dollars. And, if, it's possible for a government or the governments of the world, Europe, China, the U.S., Canada, to decide that they're going to spend a few $1 trillion on decarbonizing the economy. And it wouldn't even take wouldn't even take half of the amount that was spent on the Second World War, and it could be done. And it would take 10 to 20 years to accomplish it, but it can be done. Whether the political will is there or not, I don't know. But I think it's going to happen. And I think, therefore, this is the one sector where people could invest. And now the prices, the caveat here, of course, is the prices of all of those companies. We bought one company in July, and by the end of the year it had tripled. So it's just, and this is a big company. So I mean, it's just ridiculous. Tesla, which we didn't ever buy in our model portfolio for clients, is up something like 20-fold. So just in the last couple of years. So if you buy into that sector now, you'd be buying in at a really expensive valuations, and so there would be a big risk of a correction. But on the other hand, 5 and 10 years from now, I think that some of those companies will be the Amazons and the Googles of the future. And those companies went up 150-fold, 200-fold, 500-fold, 1,000-fold, kind of over a period of 20, 30 years, not just in 6 months kind of thing. So that would be the one sector. The sector to avoid, I think, would be the oil and gas sector, because more and more we're learning that the investment will not be going into that sector, and that's a sector that requires continuous investment. You have to keep spending money to find oil. The oil where it's just sitting there and you don't have to spend any money to find it is long gone. Now it's very expensive to get that oil out of the ground, and it's probably not going to be economic. So that would be the sector to avoid.
Hilliard, thank you so much for being on the show.
Thank you.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBethMcLeodGroup.com. Find him on Twitter at HMACB. If you have any questions for Hilliard or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.